Oil prices managed to pare some losses in the early trade and again rose above $112 per barrel. Moreover, the oil market has every chance of extending gains. It's obvious that Western countries intend to embrace measures designed to enforce a price cap on Russian energy. Even U.S. investment banks openly declare that this step will only lead to a surge in prices. As you know, any attempt to regulate prices will inevitably result in a deficit. Moreover, the market is already heating for real energy shortages, which are likely to become clearly visible this autumn. Experts warn that oil prices may rise above $145 and then exceed $200 and even $300. In the meantime, traders trimmed bearish positions in Brent crude oil in the area of $108. As a result, the downward cycle showed down and the crude rebounded by 3.5%. The fact that the price fell to fix below $108 on at least the 4-hour chart signals that the benchmark may well resume its bullish run. On a Friday, gold fell below $1,800 per troy ounce, followed by a rebound to $1,810. Having gained a strong downside momentum, gold futures hit the local low but failed to settle below the control level. As a result, the yellow metal faced a technical pullback and returned above the 1,800 mark. Despite the asset's short-term upside momentum, market sentiment is still bearish. Thus, if the price fixes below $1,780 on the 4-hour chart, the volume of short positions may increase again. In fact, this movement should be seen as a rebound, as gold is still under pressure, which is only mounting. On the one hand, the US Federal Reserve has already begun to tighten its monetary policy and is not going to stop. The European Central Bank will follow suit soon. Therefore, investments in debt securities are becoming more and more attractive. On the other hand, fears of energy shortages on which the economy depends force market participants to flee from traditional safe haven assets that are rapidly losing their appeal. Countries are striving to create sufficient energy stocks by any means necessary. As the central banks have impressive gold holdings, they continue to actively get rid of it and use their proceeds to buy oil and gas. Moreover, this process is far from over. Speaking of the Russian currency, expectations of a more drastic action by the Bank of Russia to ease monetary policy have already borne fruit. The ruble began to lose value, however, the US dollar's rally to 54 rubles is largely due to the fact that traders are awaiting a possible extraordinary meeting of the Bank of Russia Board of Directors. If these expectations prove false, the dollar will quickly return to the mark of 50 rubles. So, if things do not clear up until Wednesday, the market will most likely reverse. And that's all for now. We continue to learn developments on financial markets. Subscribe to our channel and follow news with us. See you soon.